With inflation hitting highs not seen since the 80s, the monetary guardians, namely the Bank of Canada or the Fed in the US, are fighting back with interest rate hikes. In theory, this should take a bite out of inflation, but what will it do to the housing market? Today, we will look at how rates affect the real estate sector, and we will begin right now. Real estate is certainly one of the biggest sectors within the sphere of investing. Many investors will begin in real estate before making the move into the stock market, and this is a very valid investing strategy. In fact, real estate can be a quicker path to financial independence if you do it right. That is a topic for another video. So if that is something you are interested in, I do need you to do two things for me here. First, subscribe, and then let me know you subscribed in the comments so I know you are waiting for that video. If I know folks are waiting, I will get it done sooner than later. The pandemic is where this all began as the world went into some pretty serious lockdowns. Governments were faced with how do they keep the economy alive and not pile on misery to people locked in their homes or businesses wondering if they can survive through the crisis. Right or wrong, the governments of North America chose to create money so that they could provide support to people in lockdowns and to businesses to prevent many of those from going under. They also cut their lending rates to historic lows, making borrowing easier than it should be. Of course, between all of the supports and then a resulting supply chain issue and, well, a war, it was not a question if inflation was going to be bad, but rather a question of just how bad can it get? Well, yeah, pretty bad. A drastic problem was going to need an aggressive solution. Holy banana bread. This brings us to rising rates. Everybody should have known that the pandemic's historic low interest rates were not going to be in place forever. However, for some people, there can be a lack of a longer-term vision. On January 1st, 2022, the best 5-year fixed rate mortgage in Canada was about 2.34%. That is awesome. However, with the rate hikes, the best 5-year fixed mortgage rate as of June 8th, 2022 was 3.69%. That is nearly a 60% increase, and the truth is, it is going higher as the rate hikes have only just begun. In fact, the next rate hike at the time of this recording is expected to be 75 basis points. So yes, this number is going up. When it comes to mortgages, you have fixed rates and variable rates. The way this works is a fixed rate has an initial higher interest rate, but that rate is locked in for a specific term, usually 1 to 5 years. There is a 25-year fixed rate, but you pay extra for that, and it is not really advisable in most cases. A variable rate starts off lower than a fixed rate, but it is not locked in, and it will move with the interest rates. Historically, though, it has been cheaper to have a variable mortgage over the long term opposed to a fixed rate mortgage. Now, with the pandemic and the very low interest rates that came with it, a fixed mortgage looks a lot more attractive. A variable mortgage rate on January 1st was roughly 2.65%, and then by June 8th, we are looking at 3.2%. Obviously, the variable will cost you more as the rate climbs. However, with a fixed rate, once you need to refinance at the end of your term, you cannot switch to a variable without breaking the mortgage. This means you will have to lock in whatever the rate of the day is, which will at that moment be higher than the variable. And if rates are falling in 5 years, when you refinance, you may be locked into a much higher rate than a variable, which rides the rate cuts down. In a way, a good way to view a variable rate is to compare it to dollar cost averaging. As it averages out over the life of the mortgage, you are paying the fair market rate. A fixed mortgage will more than likely end up paying over the fair market rate. During the pandemic, if you took out a mortgage that you could just barely afford, you have a rough time ahead of you. If it is a variable rate, that misery has already begun for you. If you did lock in a fixed rate, you have some time to hopefully improve your financial situation so you can afford the rate you end up with after the refinance. Of course, if you are looking to enter the market now, it is going to cost you more. Though in some places, there have been signs of decline in home prices, so that could certainly help. Though in other places where we have housing shortages, I would not expect to see price drops, well, anytime soon. We have talked about what is happening to mortgages. I did conduct a poll on the community tab, and the results were that 42% of you have a fixed mortgage and only 7% have a variable. That is really interesting. I also discovered that 20% of you rent. How does this affect renters? The quick answer is that it is not good. Rents will overall go up as landlords pass on these increased mortgage prices to you. Luckily, in many places, there are limits to how much they can increase your rent. However, when it comes to listing new units, they can really hike those prices up. If you are planning a move, be prepared to see a higher rent. There are also landlords that will try to get around the rent hike limits by looking for any reason possible to evict you. This allows them to renovate a wee bit, and then they can up the rent a big bit for a new tenant. If this happens to you, it is worth fighting, especially if you can easily disprove their so-called reasons for evicting you. On a personal note, this did happen to me. When the Winter Olympics were coming to Vancouver, my landlord realized with the location of the building, he could command much higher rents if he got new tenants. He started evicting people like crazy, and when my turn came, I was evicted for noise complaints by anonymous tenants. Ironically, I was probably the quietest renter in the building. I was also young and had no idea I could fight it, so I moved, and the landlord, well, he made more money. On the plus side, plenty of landlords love having long-term, low-maintenance tenants as they can save them a lot of time and money opposed to problem tenants, evictions, and the like. So hopefully the 20% of you who rent have the latter sort of landlord. In the news lately, you may have seen a story that the Bank of Canada expects people to be paying an increase of 45% on their mortgages by the time their refinancing comes. That sounds scary, and well, scary does get clicks. What they mean is the interest rate could be 45% higher. So if you had that 2.34% fixed rate, then when you renew it, it could be closer to 5.35%. We already had a 60% rise to 3.69%, so I calculated from that number. That will still hurt, but it sounds less sensational than dropping much scarier numbers. Speaking of real estate, here's a video about REITs that I think you will love. The other video is what YouTube thinks you will love. You can decide who's right, and I'll see you in the next video.